Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Thursday, October 19th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of clarifications. Number one, the candlestick that you see right there will be moving around and changing. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, ticker symbol ICU. Very, very impressive move today. Big volume, and for those of you that like penny stocks, a key component for penny stocks is definitely going to be that volume standpoint of things. And what's interesting about this one, and this will kind of sound bizarre, but just hear me out, is that a good breakout has already occurred. Now you're thinking, what do you mean it's already occurred? What good does that do? That means you've missed the breakout. And that is true. You have missed the breakout, assuming I'm going to draw this very crudely, but there was this nice little bull pennant pattern that had formed. But yes, the bull pennant has been broken. So you missed that, but the cool thing about that is this action here now allows you to ask a very important and very exciting question, and that is this. Is this price movement, is this breakout the start of something even bigger? Now think about that question. It makes no sense to ask that question if nothing worthwhile happens in the first place. But that's not the case here because something did worthwhile happen. You got the breakout. So now to be fair, maybe it's not. Maybe this thing just rolls right back over. But that is a two-sided coin because, well, I mean, maybe it is the start of something bigger, and this thing just gets ripping and roaring and is going to be over $1, by the end of the week. So nobody knows that, but the key dynamic here is that you got the breakout. You got the breakout down here on good, solid volume. So not just that question of, is this the start of something even bigger? If you like penny stocks and if you like these sorts of scenarios, certainly keep an eye on it. Next one here, ARDX. And unlike the one we just looked at, here we have a bull pennant that is still in play and has not been broken. So let's get this drawn into play here. So we have our area of resistance, and then we have our area of support right there. Let me change that to green to represent more so the support dynamic, and then maybe make it easier to see. Let's keep it all one color. So we have our resistance, we have our support, we have the nice upwards move here. For you golfers, I'll make it a little bit more visual, put the hold on there. So we have a bull pennant pattern, but in this situation, there has been no breakouts. So if the price, now of course there's no guarantees, but is it valid, is it plausible to think that if the price can curl back upwards, get to that area, and then get the break up through there, that break in and of itself could create additional buying pressure? In my opinion, that is certainly a plausible scenario. So if you like bull pennant patterns, you like stocks down below the $10 mark, definitely keep an eye on this one. Next one here, LCID, and I like this pattern quite a bit, and especially when it happens on a pretty popular stock, which I would definitely consider LCID. Now, is it like the most popular stock out there? I wouldn't go that far, but it is a relatively popular stock. So let me get the bottom part of that pattern drawn in there right there as a support. And then as far as resistance levels are concerned, oops, there we go. Let's get this area into play. Oops, grabbed the wrong. There we go. So right here we have what is known as a falling wedge pattern. Now you may think falling wedge is a bearish pattern, but actually a rising wedge would be bearish. A falling wedge is bullish. So as I've already talked about, just because there's patterns like such as a bull pennant doesn't mean the price is for sure going to go upwards. So same logic here, just because there's a bullish pattern as far as a falling wedge does not mean that the price is going to give itself a bounce. But in my opinion, is it valid? Is it plausible to think that this downwards momentum here is starting to slow down and maybe just maybe this thing is getting ready to get some sort of worthwhile upside bounce? Again, I'm not calling for a reversal. Now, can bounces turn into reversals? Yes, absolutely. But first you have to overcome that first stage of just proving that you're not a dead cat bounce. With that being said, from a trading standpoint, dead cat bounces is sometimes all you need to be able to make some really nice money. So if you like falling wedge patterns, certainly keep an eye on LCID. Next one here, NIO, and same general idea as what I just talked about with LCID, but I would argue NIO is an even more popular stock, but we have the same general idea. So I'm going to go through this one a lot quicker because there's no point in sitting here like a broken record when you just already heard me talk about all the dynamics here. But yes, we have another falling wedge here. Now, is it the exact same type of falling wedge? No, there's a little bit of a difference to it, but the same general logic applies. Looking like the downwards momentum, maybe just maybe is starting to slow down. So can you get the break to the upside? Standpoint of things, a very valid, look at things. And a lot of these EV stocks right now are showing these sorts of characteristics. So if you are a fan of the falling wedge, you have quite a bit of choices here headed into Thursday. Next one, AMC, and overall, nothing really new to report Now, for those of you that watched the previous video, hopefully remember me talking about that red line right there, because you can see opening 30 minutes here, the price actually did get within the general vicinity of that area. And to give credit where credit's due to the bears, they held strong just like they'd done previously. So a good example here on the power of charts. But price came up there, found resistance, and then got rejected back down, which now puts it into the territory of a much more important area of support. And that has to do with this purple, or excuse me, not purple, this pink line down here, which on my chart denotes a very famous, a very well-known 200 period moving average. And even if you have a very basic understanding of charts, I'm sure you've heard of that 200 period moving average, and you know that when the price is above that area, you want to see the price stay above it. So moving forward, keep a very close eye on that. And then again, overarching level, yeah, right up here around $10.25, main area of resistance. But the more important level in the near term is going to be that purple line right there. So really, there's kind of a little miniature wedge formation that is formed. So if we just pretend that each of these moving averages is a trend line, so we have a trend line right here, we have that trend line right there, then we essentially have a wedge, which brings about the question of who's ultimately going to win in this battle. Are the bulls going to win with a break to the upside, or the bears going to win with the break to the downside? That all remains to be seen. But yeah, all eyes on this wedge. Let's see who ultimately wins this battle. Real quick, want to take a break and personally invite you to get signed up for this free live online web class that I'm offering here very soon. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box, or if you're watching at my site, there's an area right there on the webpage you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up for the free live class. Next one here, TSLA Tesla, and a very, very rough day here. Not because it was such a red day, but from a technical point of view, and again, this will mean a little bit more to those of you that have watched the past videos, but I've been talking about, and to give credit where credit's due, the price has done a fantastic job of holding up above this area of support, or the support zone, as I've been calling it. But today, and it tried again, earlier on in the day, you can see it was doing its best, bottom part of the zone, but then eventually the bulls just couldn't hang on any longer, and a big fellow, flush to the downside occurred. So yeah, big movement here in the very bearish direction, which brings about the first key update. And this is just based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So if there is any sort of attempted, bottoming movement here and then curling back upwards, that'll be the first big question mark in terms of whether or not the price is going to have enough strength to push up through that level. So 247.65 will be that first key level to watch very closely. In terms of levels of support, actually, let me just get rid of that level as it served its purpose for now. And you're seeing here that I'm having to go back quite a bit of ways in the chart's history. But next key level from a support side of things, going to be down there at that level, which is basically right where the price is at right now at 242.50. And I'm going to add in one more just because this is got quite a bit of downwards momentum, with the next key level being down there at the 238 mark. So I'm not saying 238 will come into play on Thursday, but I don't think that's really too unrealistic if this current momentum situation, continues into Thursday. But overall, very rough day today. Good to see that the price currently is trying to do battle, is trying to hold above 242.50. So let's see if that can continue moving forward. Next one here, PLTR, and overall, nothing has changed from the bigger picture standpoint. So for those of you that have watched past videos, then hopefully remember me talking about this, overarching level of levels of resistance and support, and basically this big old sideways channel pattern. We did get more confirmation this morning, opening 30 minutes. You can see right there, price did come up and never hit the exact top of the channel, but got close enough. And yeah, once again, as has been the case all these other previous times, the price got rejected from that area. Although I will say that as of now, that $18.30 mark, somewhat irrelevant given the price is all the way down here. I would call the more relevant area of resistance, if there is any sort of attempted bounce, right there, that purple line there, 50-period moving average, which you can see now that the price has dropped below it. It has gone back to acting as resistance. In terms of supports, nothing new here. You still have the bottom part of the overall channel down here at 1690. Although one thing to now start to keep more an eye on is going to be that pink line there, the 200-period moving average. And the reason I say that is because it is a moving average. So as time goes by, that line is going to continue to move itself higher and higher. And eventually it will cross back up above 1690. And at that point, the 200-period moving average would actually have higher priority over the bottom part of the channel. But that hasn't happened yet. But nonetheless, it is still getting close within generally potentially happening. So keep an eye on these levels. Next one here, RIVN. And I'll say this one is of interest for very, very simplistic reasoning. So if you're looking for something vastly complicated, you're not going to find that here in this setup. But my question mark moving forward is down here at 1765. First off, can the price get down there? But then if the price does come down here, is history going to repeat itself? What's the history? Well, you can see on essentially two periods, both there And there now, I realize that right there didn't hit exactly. But again, broadly speaking, within the general area, you can see twice before the price got in that area and twice before there have been some very nice bounces. Now, as I've said, I wish I could say trading was, as easy as guarantees and as easy as saying, well, because it's bounced twice before, it will for sure guaranteed, without any doubt, bounce again, if only it were that easy. But is it plausible? Is it valid to throw out that question and suggest that there could be some sort of bounce? Absolutely. So if you like to play these sorts of risk-reward scenarios from a bounce standpoint, 1765, certainly very interesting level. Next one, SFT. Pretty ugly looking chart right now, although there's still some hope for it. But you long-time listeners know what I'm going to say next. There can be opportunity in the ugly, and that's what we have here. So it's really just a situation of, do you like these sorts of pullbacks where you get big, solid movement, and then you start to get a bigger pullback? Things are starting to look ugly. But what makes this interesting to me is that, yeah, the price has come down to this gap close location, but it's also sitting right here around that purple line there, the 50-period moving average. Now, I completely understand if you would say, no, I don't think it's 13.5 cents as the main level of support. Maybe you think this line should be moved up a little bit. Maybe you think it should be moved down a little bit, and that's fine. I'm glad that you're thinking for yourself. But the point here is that around this broad area, you got to think there's people watching and wondering, is there going to be some sort of bounce? Meaning one of these situations where everybody starts to give up. Oh, this is looking so ugly. Oh, this is looking so ugly. Oh, this thing is never going to bounce. It's never going to bounce. And oh, bonk, there it goes. Have you been there before? You say something's not going to happen, and then all of a sudden it happens. And that's, the whole psychology area with trading. But to me, 13.5 cents right on that broad area is a level where this, ugly could drive people to completely wave their white flags, and then all of a sudden the price decides to turn around and bounce. So if you like these sorts of potential opportunity in the ugly, especially on penny stocks, keep an eye on it. Next one, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market as a whole is going to rise, this one will also rise. It just allows you access at a much lower price point, which makes it a very popular ETF. But today, the NASDAQ had a brutal day, or I should really say more so brutal afternoon, because it started off the day very nicely, all the way up here, and then just like that, down it went. And a very rough day. Again, not necessarily because it was a red day, but because from a technical standpoint, the price is now broken and is currently down below that pink line there, which is the 200-period moving average. And the last time it was down below that area, you can see, was way back here, several weeks ago. So just because it's dropped below that area doesn't mean that for sure guaranteed it's game over. It does not mean that, but now things are starting to look a lot more shaky. So I'm going to go ahead and drop this level down because the key level to keep an eye on now moving forward is going to be right there at that $37 mark for a couple reasons. First reason being this was a former area of support, both there, and then right there. And that's just the foundational rule in charting. When levels of support are broken and closed below, they tend to act as resistance. And on the flip side, you just also have that pink line there, which is kind of hard to see because it's a little bit behind that red line, but that's going to be that 200-period moving average. Again, same logic. Was a support. Now that the price is broken, you would expect it to act as resistance. So right there at the $37 mark, going to be a very important level to watch if there is any sort of attempted bounce. And then as far as areas of support are concerned, next key level to watch moving forward, going to be right down there at that level, which is at $36.10. And if 36.10 cannot hold, then all of a sudden things start to get sketchy because now all of a sudden, if the price falls into this area of the chart, that's essentially putting it back inside of this range that has not been seen for multiple weeks. And I'm assuming you're bullish. You don't want to see the price going back to where it was. So not quite at those areas yet, but if the price does continue to drop downwards, then that 36.10 mark, or 36.10, becomes a very important level. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to get signed up for that free class. It'll be Thursday, October 19th at 7 p.m. Eastern Time, so I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit that like button, leave a comment down below. If you're looking for an easy way to help out the channel, just do those two things. Hit the like button, leave a simple comment, even if it's just saying, hi, give me your watch list tomorrow. But I really do appreciate it, and thank you in advance. And definitely go get signed up for that free live class. So thanks for watching. Take care. Have a good one.